Welcome back, little fuckers, to another trade recap. Today's Friday, the 29th. All right, we're gonna be taking a look at the trade I took today, and we went short. We didn't do a little scalp move to get in those fucking calls. No, nah. Today we went short, and we full ported that shit. We full ported short. So let's get into the analysis. This dotted line right here shows the daily open that we had on Friday. Okay, just to remind you guys, on Thursday, we had a nice little gap up here. Came back down, and this was our draw on liquidity, right, for pre-market and obviously market open. And then we also had next draw on liquidity that was up here waiting for us to be taken. Obviously, 12 a.m., boom, 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 we run up. 3 a.m., we take this liquidity. Obviously, there is not going to be a big move up or down because this is pre-market. Institutions are not buying and selling a lot. They are buying and selling, but they're not buying and selling a lot to have this whole down move going back towards fair value gaps and stuff like that. So you can see a reaction, but you can't see a massive reaction like on the 1 hour. It's just one little candle, right? And then that little candle gets eaten up. And 8 a.m., we get that draw on liquidity, which I was actually waiting for in my notes. Let's pull them up real quick. I'll show you guys what I was thinking. Sorry, I just ran upstairs after dropping off my little sister. So I'm kind of tired. Okay, so we had this today, pre-market. Like I said, we had draw on liquidity, or well, I guess this was after. But you could see these candles right here. Where were we? Were we on the 1 hour? Yeah, 1 hour. Right here, I was this doji, right? We came down. I guess I had like a fair value gap marked right here. Little fair value gap marked right here. Bounced off. Came into this draw liquidity. Now, my next thoughts and what I thought was this was going to run up to this fair value gap right here and maybe this buy side liquidity, right? The problem with that is it didn't do that. And what it actually ended up doing was reversing and rejecting on these consequent encroachment of this 1 hour fair value gap. Actually, this is probably this is like a 2 hour fair value gap. 1 hour fair value gap. Didn't actually want price up here. It wanted just this. And that's where it was going to be. Forgot to mark it up, but now I have it. I have the mean threshold and everything, and you can see how I perfectly respected that consequent encroachment. Obviously, if you do pay attention, there's this little writing, and we had core PCE at 8:30. We had Chicago PMI at 9:45, and we had consumer sentiment at 10. So from 8 to 10, there was news. All three red folders. That means from 8 to 10, I'm not trading. I'm not getting in the market. That means when 9:30 bell opens, I'm not trading because at 10 we have news. And if that news is small, fine. But you don't know if it's small. You don't know. You simply don't know. So you don't want to be that guy that has a position and gets fucked because of news. So what happens, right? We hit this consequent encroachment, which I later realized. Obviously, we have a breaker structure. We don't yet have a market structure shift. I will mark that on the 30-minute. What ends up happening here is we create a swing high right here on this candle. Let me try to draw it out for you guys. Create a swing high right here. Then we create a swing low. And then this swing low ends up taking out this swing high, which creates a market structure possible if price sweeps it and comes back down. So this makes this market structure this makes this market structure valid. Makes it valid, makes it so that we are obviously bearish for the day. And if we're bearish, you may ask the question, if we're bearish from this point on, what is our next draw on liquidity? Because we're not going to be drawing up for this fair value gap or this liquidity up here, because today we just had a market structure shift. If you look on the daily, I believe we're bearish too on the daily. About to turn bearish on the daily when the market opened. Market structure shift on the 11 a.m. candle. Let me drop down to 30-minute. the first draw on liquidity was down here with this 15-minute fair value gap, which was hit perfectly. Let me go down to 15-minute. Was hit perfectly, rejected right off, and then this is actually where I took my entry. Was around lunchtime, if I remember, right out of my class. Or no, this was during my free period. So we hit this 15-minute fair value gap, but I knew that we actually wanted to go lower to get this sell side liquidity. I don't know if you guys can see that. Let me just mark the text in red so you guys can see this sell side liquidity down here. Let me put it in the middle like this and make it nice and big, right? So we had the sell side liquidity down here that we wanted to take out. Now, notice how if price is up here and price wants to come down here, obviously after this huge move, after this market structure shift, you're expecting a big move. You're expecting an expansion. You're expecting fair value gaps. You can't create fair value gaps if you don't have big moves and displacement. And the thing is, if price already took out this 15 little fair value gap, and all he wants next is this little tiny sell side, and it's just going to stop there and be done for the day and consolidate or whatever, then we're not going to get a lot of displacement. The move is not going to be a move, and we're not going to hit our levels. So my next area was this area of interest from yesterday, which was a fair value gap, which was not only respected once, but twice, and also created more sell side down here to be taken. So I was like, okay, well, when I took this trade, which I will explain, my target would be from down, this would be the area of interest. And then I realized when you look on QQQ that we actually had a perfect setup to tap into this breaker block, or this balanced price range. Balanced price range. God, get the fuck out. So this happened. I will tell you what is going on here. It looks like, okay, yeah, okay, I get it. So on the daily on QQQ, this is again why I love QQQ. Its levels are so reliable. On QQQ, we're obviously bullish, right? Even on the weekly, we're bullish. Daily, we're bullish, right? Which is fine. But we had a bearish mindset when that market structure happened because we caught this little move down, right? This little move down, even though we could have caught this whole move up. And this was just because this move up pre-market, right? This wasn't actually what happened. Yeah, this is all pre-market. This whole move up is pre-market, and then the whole move down is market when market opened. So on the daily, what the fuck? On the daily, if you notice, obviously there's a bearish gap. And this is huge to know because you want price to come up to come back down, right? As we mentioned that in our previous videos. So you mark the gap app. Okay, I'm sorry. My English is just fucking horrible right now. You mark the gap out, okay, with this blue line or blue fair value gap box. And then what I want to do is I can't just enter a trade off this random blue box. It has to be either the middle or it has to have a point of confluence. So I drop down to the 4 hour. Is there a fair value gap here? Sure. Yeah, there's a fair value gap up here. There's a fair value gap up here. Let me mark it in red just so we can see. Then there's a fair value gap here. There's a fair value gap here. Okay, cool. But that aligns with our big fair value gap. Let me mark that. I don't know. Purple. Can't even see that. Green. Okay, it's so overlapping. Anyways, you get the point. There's a fair value gap right there. Maybe the 3 hour, right? 3 hour also has the same fair value gap here. The 2 hour, okay, same, multiple fair value gaps around here. The 1 hour, and then this is where I focus. Most of my fair value gaps are drawn on either the 1 hour, the 30-minute, or the 15-minute. If anything, on the 5-minute, it's not going to be a point of reversal. It's going to be a point of entry. So the 1 hour has one clear fair value gap in here, and it's this one. And there's the smaller one down here. I don't know if you can notice. It's right here. And this is super small, but these price action matter. It's also right here. Boom. Okay, so you have two like that. You even have three. My bad. You have three right here. But this one is like very, very tiny. And the problem with this one is that it's going to get filled very easy. It's going to get liquidated very easy. And what I want you to notice is it doesn't reach for this little tiny one. It reaches for the highest one up here. Not this one, because we don't have one on the 1 hour. It's the one that is repeated the most. So 1 hour, this one, 2 hour in the same area, 3 hour in the same area, 4 hour in the same area, right? And it looks like every time it's always in the middle of that fair value gap, right? If we draw a mean threshold from here to top to bottom, right? 3 hour, it's around the middle, right? Obviously, boom, boom. 2 hour, it's probably also in the middle. Boom, boom, right? So you see these lines, this gray line, it's around here. So it's a little hard to see, but all these gray lines in the middle represents the consequent encroachment of the fair value gap. So that means that if the 4 hours lining up with the 2 hours and the 3 hours is lining up with the 1 hour, if all these fair value gaps have the same mean threshold and have the same consequent encroachment, especially the 2 hour and the 1 hour and the 3 hour are basically lining up perfectly, that tells me that there's a very good chance that this 1 hour fair value gap is going to hold up, right? So this 1 hour fair value gap, where price is most likely to go, because this is where it really wants to go, is going to stay strong, right? We're not going to come up here because there's no fair value gap is overlapping, right? The 4 hour has one, but if you look at the 3 hour, there's one. What about the 2 hour? Well, there's none, right? And then the 1 hour has none, right? And if you even go down in smaller time frames, there's none. Price comes, breaks through this, whatever. Pre-market, obviously, like SPX, we take out this liquidity, that liquidity. Those are both draw on liquidities that we take out pre-market, take that out, have a nice little gap down. We also have a volume profile gap that was introduced on the daily, not on the daily, on the 4 hour. That was introduced there, marked it on the 1 hour. And this, I like these gaps because this is most likely where price will want to come and fill after a market structure shift, especially on SPX. When you see this, I knew damn well that on QQQ we were going to come down and grab this fair value gap, or this volume profile gap. So after we do this, obviously we tap into this block. This is again at 10 a.m. So if you look on SPX, where were we at 10 a.m.? It looks like we were right here on this candle at 10 a.m. when we tapped into that block. So SPX had to move a little bit earlier. Actually, we're on the 15 minute. So let's actually hop down to 15 minute, 10 a.m. Let's see. 10 a.m. is right here. 10 a.m. is right there for us. So the actual tap into the box for SPX for us would have been at 9:15, 9:30. And where were we at 9:15, 9:30? We were up here. We were actually on our way. Oh, we were tapping into the box. But this was our big fair value gap and not our little fair value gap. Our little fair value gap actually tapped into the 10. And that just proves more confirmation, if this actually rejected well, that on SPX we were going to dump. We get a market structure shift. QQQ, we get a nice little move down into this fair value gap, or into this VP gap, get a nice little reaction, and then we dump right through it, targeting this. I believe this is where I took my trade up here on SPX. Nice little correlation on QQQ. And then I noticed this balanced price range from another creator, but I marked it out pretty early too, is there's a bearish fair value gap here, right? I want you to notice there's a fair value gap right here that we created right here. And it gets respected once, twice. It doesn't get traded through though, right? You want, for a fair value gap to be, valid, you want price to actually come and form candles inside of here and then to pump out or to actually reject. The problem is, if you look at this candle, we didn't trade at all through it. At all. Not one single candle was traded through it. This whole 1 hour got, we traded above, if that makes sense. We just fucking fucked it, you know what I mean? We just went right through it. We did come back and trade into it, but again, on the 1 hour, we closed above it. So what we call this is a balanced price range. That means that when price comes back to it, it's going to do one thing and one thing only. It's going to support it. Same thing opposite, right? If this was a fair value gap right here, we drew it out and price just came rushing through it without it, it would come back, hit that balanced price range, and then come back down, right? So now we expect, obviously, when it comes up, a nice little move back up. The thing is, after we took out this VP gap, we wanted to come lower. And even on SPX, you can see we also had a BPR and a breaker block that was formed here. I mean, this is not a fair value yet, but you can see on the 1 hour it was. And we targeted that, and that's why I left one runner during lunch. And if you guys can recall, I was showing everyone that I basically made like 2.5 grand on paper trading because that was my position left. Hence why I kept my position running, because I was like, we're targeting this breaker block and this liquidity on sell side on QQQ. So if QQQ is going to do the same as SPX, then SPX is definitely going to come down and reach not only the sell side, but go down to this area of interest and even come down into this breaker block and BPR. So my runner was left, you know, first take profit right here, second take profit, runner. Let's talk about my entry position, because this is pretty interesting. And I'm starting to like this, and my strategy is actually starting to refine, and I'm kind of happy. This was a 5-minute, 3-minute, 1-minute breaker structure, kind of just like full port, kind of fucking do whatever. As you guys know, I trade market structure shifts, fair value gaps, and then either breaker structure or, you know, obviously I'm confident in the position. So I love to see a market structure shift form. When that happens, we create mostly around this market structure shift, we create a fair value gap, obviously in the direction it's going, so bearish. So what I would like and what my strategy teaches is I want to see price react off another fair value gap or other liquidity that gets swept, hence down here, come back up into this market structure shift area where this fair value gap was created. And I want to find a structure in a market. I want to find a fair value gap that was created during this displacement down that will take out liquidity, and that will make us go even further down. So if you're looking at any fair value gaps at all, I would like to mark them all on the 15-minute, but I also said I mark them on the 5-minute if it's an entry position level fair value gap. So obviously when I marked it out, price came down. Let's just remove this for a second. Let's remove this OTE also. So 5-minute price came down, boom, 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 hit this 15-minute fair value gap right during my free period. I was watching this, and I believe this is when like Keegan or something. Yeah, Keegan told me to go in calls, right? Because he was scalping at that time. And so I'm like, you know what? Fuck you, go suck my dick. We're going in short, right? But I obviously he entered calls here, so he had a great trade. You know, props to him. He was scalping this little salvage move up, but when you look at the big picture, he was trading this little thing, right? He was trading this little box while we were trading this whole fucking shit. Does that make sense? We're smarter than that. We're smarter than that. We see the whole move. We don't see this little tiny babyish move. Okay. Anyways, that's not the point. So 5-minute marking, we had this fair value gap here, and there's a bunch of other fair value gaps, right? If you go to the 15-minute, there is obviously one big one that you might already notice is this one. I'm going to mark in blue just so you can see it easier. This one, right? After every fair value gap is noted, I enter off the consequent encroachment. So what I do is I mark the consequent encroachment, which is, you could call it the mean threshold too, right? Mean threshold is marked, go down to the 5-minute. I can delete my fair value gap blue box, whatever, that's kind of distracting to me. And I can have this. And now when price comes into this range, you'll see there's 3 levels it can hit. It can hit the bottom of the fair value gap and reject. It can hit the consequent encroachment, or it can go to the very top. And guess what we had on that top 15-minute fair value gap? We had a 5-minute fair value gap. So to me, at first, I saw this as an entry position. Okay. I was like, okay, yeah, this is what I want to do. But here's the thing. I was like, okay, well, I'm missing one thing. I'm missing one thing that I love. OTE, optimal trade entry. I love this thing with a fucking, I could jerk it off every single day. This OTE saved my life, basically. So let's move this out, this consequent encroachment, and you'll see how this consequent encroachment actually comes back with the OTE. So the OTE, swing high, swing low. Would you agree? OTE. Take a look at that. Take a fucking look at that. Isn't that just like, it lines up, man. It's there. Like, you can't miss it. It just lines up. It's in the golden zone. It's there. It can't get better than that. It just can't. It just can't. So what I like to do is I like to take my entries off the 0.705 OT level. And again, if you line this up with the fair value gap mean threshold, which was, where was it? Oh, fuck. We need to go back in the 15-minute. Go back in here, mark this threshold, mean threshold. Guess where that lines up, baby? The consequent encroachment of the 15-minute fair value gap lines up almost perfectly with the 0.705 OTE line. That tells me that there's two PD arrays confluencing with each other with a bearish mindset that price will hit this right after a market structure shift to come lower into bearish PD arrays down here, targeting a PBR and breaker and the QQQ liquidity in a PBR. That's why I took my trade. That's why on the 3-minute I took my trade. And that is why I took my trade right here off the 7.5, whatever this, right? That is why my first target, what stop loss, obviously it was above this order block. Okay, it's fair value gap, my bad. The first drawn liquidity was this. That was my first take profit. My first take profits didn't need to be these lows. I knew that we were going to sweep these lows anyways, because this is what was traded through in this fair value gap. I knew that we were going to break this fair value gap. I knew that we were going to break these lows. So next was this first take profit, second take profit, and nice little runner, third take profit for a nice 15-to-2 risk to reward ratio. This is trading. This is what's fun, and this is what I do, and this is what I love, man. This is like, it's getting better every single day. It's just, I can't stop doing it. You know, it's very addicting. It is what it is, you know, and this was one good day, man. I'll tell you, we'll have plenty of other days. This analysis is just great. One note I will have to myself, though, is I need to be more prepared. This analysis took a while, and it was during market session. I didn't have all this analysis during market open. I didn't have this during market session. I usually do all of my analysis after I trade. And the problem is, yeah, the OT I set up when I trade, yeah, the mean threshold I set up, but all this market structure shift and fucking fair value gaps you see left and right, all this liquidity left and right, I have some of that already on my charts, but most of it you see here, there's a lot that I add on later that I realize that I could have added, right? Again, this comes with experience, you know, like what you see, what you don't see, and, you know, obviously, yeah, what you see and what you don't see. And it comes with time, you know, I will learn this over time. It's just, I got to be patient. So I'm going to kill myself, to be honest, at this point. Like, I can't speak, I can't talk, like, I can't live. Like, I'm killing myself, you know? Fuck it. All right, goodbye.